This week's number, $548,000. That's how much Cristiano Ronaldo could make per day with incentives at his new Saudi club, Al Nassr. It's a 3-year contract, $75 million per year guaranteed, which could reach $200 million per year with incentives.
Tenha uma boa noite e...
Welcome to Prof G Markets. Today, we're discussing Nelson Peltz's proxy war at Disney, big bank earnings, and the dating app market. Here with the news is Prof G media analyst Ed Elson. Ed, what is going on?
I'm great, Scott. I'm jet-lagged after our London trip.
You don't get jet lag at your age. Just wake up, have a quarter pounder and a couple Advil. That's what I did. It fixed everything when I was your age. And a Diet Coke.
I just want to provide some context on what it's like to work for Scott. So we were in Munich for this DLD conference. We were supposed to fly back on Sunday. We were supposed to get back in time for work on Monday. And then with less than 24 hours notice, Scott texts us, change of plans. I'm flying you out to London. And then when we get there, Scott's like, here are some Chelsea tickets. Also, here's my credit card. Go have fun.
I love this story because it makes me seem nice and generous.
You are.
And you had a good time, right?
I had an amazing time.
What was the highlight? The Chelsea game? Or
Well, Chelsea won, but we still played like crap. But that's okay.
They played Crystal Palace? Who did they play?
Yeah, Crystal Palace.
There you go.
I was hoping that Claire and Caroline and Mia would be down to support Chelsea, but I sort of told them how we kind of paid our way to success, and I don't think they like Chelsea anymore.
Oh, there you go.
Yeah.
Oh, well, there's always Arsenal or Tottenham. All right, what's going on with the news?
Let's start with our weekly review of market vitals. The S&P 500 had its worst day in more than a month, and the dollar hit a 7-month low. Meanwhile, Bitcoin breached 20,000 for the first time since early November. And finally, the yield on 10-year treasuries fell on more signs of weakening inflation. Shifting to the headlines. Microsoft is laying off 10,000 employees, or about 5% of its headcount. For context, the company added 40,000 jobs in the last fiscal year. The federal government is running up against its $31 trillion debt limit. Treasury Secretary Janet Yellen said the US will start taking, quote, extraordinary measures to avoid debt default. And she'll also give Congress about 5 months to raise or suspend the ceiling. Data continues to show that US inflation is cooling, as you predicted on this podcast, Scott. The Producer Price Index, which measures inflation on the supply side of the economy, grew at its slowest pace since March 2021. And overseas, China's population shrank in 2022 by 850,000. That's its first population decline in 61 years. And at the same time, China's GDP expanded at a historically low rate, 3% GDP growth. Scott, what do you think?
Well, just first off on the media's hair on fire around these layoffs, and we've talked about this. You're smart to question stories you read or think about the larger context, and that is, okay, the headline is Microsoft laying off 10,000 people. They've hired 40,000 people in the last year, which means their net hires in the last 12 months is 30,000 people. Or UCLA has a total student population, undergrad and grad, of 30,000 people. So Microsoft, the headline is Microsoft is laying off people. It's in bad shape. No, Microsoft has given a job in the last 12 months to the equivalent of the entire UCLA student community. And yet, I mean, it just strikes me with the stat that you guys brought up that I just love is that as a percentage of non-farm payrolls, layoffs are lower right now than they've been than they were pre-COVID. Anyways, don't believe everything you read, or keep in mind there's context around everything. In terms of the population, I think this is a big story, and that is Peter Drucker, who's sort of a role model of mine, an economist who wrote several books. Anyways, he's a great – if you're interested in economics, if you're interested in theories and trending and forecasting, he's a fantastic role model. He wrote, "The developed world is in the process of committing collective suicide. Its citizens are not having enough babies to reproduce themselves, and the cause is quite clear. its younger people are no longer able to bear the increasing burden of supporting a growing population of older, non-working people. Evidence of this, China's population dropped 850,000 in 2022, as you referenced. That's its first drop in decades. And GDP also came in lower than expected, plus 3% for 2022 versus 5.5%, which was expected, second worst growth rate since 1976. Birth rates have fallen almost 70% in just a generation. Think about that. Birth rates have been cut by 2/3. The one-child policy, which was disastrous from 1980 to 2015, ended, but it seems to have continued. This is a huge problem for China's real estate market. Who's going to buy these homes? 1/4 of economic output. And a report by the Chinese Academy of Social Sciences predicted the main pension fund will run out in 2035, in part due to the shrinking workforce. China has also one of the youngest retirement ages in the world at 60. China's gender ratio in 2022, 104.7 males to 100 females. And among young people aged 15 to 19, it's as high as 116 males to 100 females. And that may not sound like a lot, but basically what you have is, even if everyone pairs off, there's 16 dudes who don't get a partner. It seems like it's going to get old before it gets rich, said Andrew Harris, deputy chief economist at Fathom Consulting in London. It's just so interesting because when I was growing up, everyone was talking about a population bomb, that there were too many people, that natural resources were going to be stretched. And I never bought into it because I used to fly from LA to New York, and I remember thinking most of the time you look out the window, you see nothing. You see no sign of human life. And people talk about pollution and our overfishing of the seas. And the reality is if you have 10 babies, there's one or two that come up with extraordinary ideas that make the world more productive and make it a better place. And when you stop having kids, you not only lose that creativity, but also we have a political system that is skewed towards old people. And that is, in the U.S., we've cut the wealth of people under the age of 40 as registered by the percentage of GDP from 19 to 9%. We've cut their wealth in half. But there's more and more seniors, and we have the greatest transfer of wealth in history, known as Social Security, where young people transfer $1.5 trillion to old people, oftentimes who do not need it, who are the wealthiest generation in history. So who is going to pay for this increasingly aging populace when we don't have young people who are working? And then within that decreasing cohort of young people, there's an increasing number of young men who don't want to work at all. So I think this population implosion is a really serious issue, and I think it comes back to some general trends. One, as women become more educated, they stop having kids. They realize it's a shitty deal for them. Or as we continue to transfer wealth from young people to old people, they just don't have the money. You know, old people don't get to decide to have grandkids. It's their kids that get to decide to have children. And while Pop-Up and Nana are on crystal cruises, their kids can't afford to have kids.
Yeah, it's one of the few things that you and Elon fundamentally agree with. I mean, he talks about this all the time, that we need to have kids. And so he's sort of making good on that promise. Let's move on to our first story. Disney is gearing up for a proxy war with activist investor Nelson Peltz and his asset management firm Trian Partners. Peltz believes Disney has been mismanaged and is particularly disapproving of the company's $71 billion acquisition of 21st Century Fox. So Peltz wants to steer the company in a new direction, and he's asked to join the board of directors. And that isn't out of the question, considering Trian Partners owns roughly $900 million worth of Disney shares. However, the Disney board rejected his request, and now Peltz is out for blood. Peltz went on CNBC, and he criticized the company's management, including the CEO, Bob Iger. And soon after, Trian Partners released a scathing presentation on Disney's financial situation. And in response, Disney published its own criticisms of Peltz, and they also urged shareholders not to vote Peltz into the board of directors. Scott, you're something of an activist investor yourself. What do you make of all this?
Oh, Disney's just fucked up here. Disney's all wet. First off, just from a strategic standpoint, if you want to silence an activist, the easiest way to silence them is to put them on your board. And of the 10 or 12 board members at Disney, no one deserves to be on that board more, other than Bob Iger, who's the CEO and gets a board position. No one deserves to be on that board more than Nelson Peltz. Why? He has 900 million reasons. He's bought 900 he spent $900 million buying shares. And a fiduciary is supposed to be someone who empathizes with different stakeholders. Who can better empathize with shareholders than someone who's committed almost $1 billion of their firm's or their own personal wealth? In addition, I followed Nelson Peltz for a long time. He's, I think you could argue, a constructive activist. He's not a burn the village to save it kind of guy. And all of his criticism, specifically that they overpaid for Fox, that they've overspent on operations, specifically around the streaming network Disney Plus, that they did not do what a board is supposed to do, and that is put in place a succession plan. He's right. He's right on all three counts. So, one, he's made a huge commitment. Two, he can empathize and represent shareholders really well. Three, every issue he's brought up, he's right as rain on. So Disney's board, in a defensive, ego-driven move, which is often in these, you find a lot in these cases, has said, well, what, you dare to insult us? And I'm sure Bob has said, I don't need this shit. I'm 73. I'm a master of the universe. I'm not going to put up with a guy who doesn't like me in the room talking about my compensation. Well, guess what, boss? He's bought $1 billion worth of your stock. Put him on the goddamn board. And all evidence of Nelson's history is that he's constructive. So they're creating a distraction. They're going to waste time. They're going to waste money. And this is what's going to go down, Ed. In the next couple of weeks, shareholders are going to go, okay, guess what? Bob, your stock's at a 5-year low. Actually, it's at an 8-year low. It's down 35% from a year ago. It has underperformed the S&P and almost every other peer company or its peer group. And this is despite the fact that Disney has just an unrivaled trove of assets, that their parks are killing it. So it's hard to defend these accusations. He's right. So this is what they should be saying. We welcome Nelson Peltz to the board. Any shareholder, we welcome. We don't have a monopoly on the truth. It's a difficult environment, and we welcome the views and insight of any shareholder, and we welcome Nelson to the board and look forward to a productive relationship moving forward. And they come out with this bullshit that Nelson isn't qualified. Nelson is more qualified to be on that board than almost anyone on that board. So I find this pretty, in my opinion, this is sort of a slam dunk and represents the worst about ego-driven boards. And I think in the next couple of weeks, shareholders are going to call Bob and the chairman, I don't know who the chairman of the company is, and say, look, he's kind of making a whole lot of sense here. Why don't you just put him on the board? And when it becomes increasingly obvious that they will either lose at this board meeting or the next one, and he'll go for blood. He'll nominate 3 or 4. He won't just say, just put me on the board. If he's going to be forced to go to the board or to the annual meeting, he'll nominate 3 or 4 people, and they will come to some sort of accommodation when they realize they're going to lose at the annual meeting, and he's going to go on the board. But this to me is straight out of the bad decision playbook, and that is the majority of bad decisions in corporate America are ego-driven. There is no reason to keep this guy off your board. Disney, get your head out of your ass. How was that? How was that?
Yeah, so some stats and a few things I want to address. So first off, Nelson Peltz owns, Scott mentioned his $1 billion stake. Nelson Peltz owns over 9 million shares in Disney. The entire Disney board owns 426,000. So his stake is literally like 20 times larger than the entire board. But let's just go through a few of the things that he's criticized. And then I'm going to play devil's advocate. But the first thing is he's criticizing the balance sheet. That's a big part of this. So Disney's net debt before they acquired Fox was $17 billion. After the acquisition, $42 billion. Do you agree that, one, do you think that the balance sheet is screwed up now? And two, do you agree that they massively overpaid for Fox?
Oh, well, they did overpay for Fox. And the two smartest people in media in the last 50 years are probably Rupert Murdoch and Jeff Bewkes. And they both sold at the exact same time. Rupert, the Fox assets, or some of the Fox assets, and Jeff sold Time Warner. And when Jeff and Rupert both sell assets at the same time, you do not want to be on the other side of that trade. Basically, they looked at the world of ad-supported media and they said, or streaming, they said, we don't have the artillery, we don't have access to cheap capital like our competitors, and they were able to get an amazing price. There's just no denying they vastly, AT&T will tell you, AT&T will admit they overpaid for Time Warner. And there's no doubt about it. Disney vastly overpaid for these Fox assets.
Yeah. And the other big thing that Peltz brought up is the dividend, or specifically the elimination of the dividend, which Disney had been paying out to shareholders for 57 years. The dividend went from $1.76 per share in 2019 to $0 in 2021. Where do you stand on this dividend issue?
Well, it's just a symptom of the underlying disease, and that is financial mismanagement. They overpaid for Fox. They've probably overinvested in the streaming network, and they haven't managed operations as tightly as they, at least Nelson, would like to see. And as a result, they just don't have the money to distribute back to shareholders in the form of a dividend. So one is just a symptom of the underlying disease of kind of financial, you would call financial mismanagement or a big mistake here. And to be clear, Disney's made a lot of amazing acquisitions. You got to give Iger credit for buying Lucasfilm and Pixar, and I mean these things and Marvel. These things are the gifts that just keep giving. But fixing the balance sheet isn't easy. You got debt, you got to deal with it. And the question is, should they exercise their option to buy the remainder of Hulu? But they're in a tough spot, and they have to compete with Disney Plus. You can have some empathy for the amount of money they've had to spend because they have to go toe-to-toe against these giants that have infinitely cheap capital, specifically Apple, Amazon, and Netflix. So they're in a tough spot, but their performance has been so underwhelming. Since 2014, Disney stock is up 28%, and that's versus the S&P at 111%, Live Nation at 268%. And get this, Netflix at 513%, and that's even after Netflix has come down about 50% off its high. So Disney, by almost any reasonable metric, has vastly underperformed. So somebody wanting to come in here and put $1 billion to work and that wants input, that seems extraordinarily reasonable to me.
Mm-hmm. Okay, and final question here. He's pointed out all of these things that Disney is doing wrong, and I find that compelling and reasonable. Barely anything about what they could actually do to improve the business, or if he has made any suggestions, it's extremely vague, like cut costs, reinstate the dividend. The only thing that's pretty tangible and clear is that he wants Bob Iger out, at least within the next 2 years, and he's going to find a new successor. Is this how activist plays always go down? You sort of criticize until they let you in, and then you start making decisions? Or is this kind of a premature proxy fight?
Well, board members aren't supposed to be tactical. They're supposed to be strategic, and that is they're not supposed to make operational recommendations beyond sort of the big stuff like exercise. And he has said Disney should exercise the agreement to buy Hulu. They need to cut costs. They need a succession strategy. I think Bob Iger's 73. They need a succession strategy. He should probably plan to leave the building in 2 or 3 years. So I don't think that's anything. And he's even said in his communications that he doesn't think they should replace Bob right now, that there's just too much instability. So, getting down in the weeds around what they should do with the parks or specifically where they should cut costs, I don't think that's what board members should do. It's obvious that this company needs to tighten, needs to cut costs, needs to probably make some big bets in certain areas, whether it's doubling down on Hulu, what have you. But keep in mind, once he's in the boardroom, he's one of 12 voices. He can't just unilaterally stand up and say, okay, cut 10% of costs. The CEO still gets to make those decisions, and the board gets to approve whether or not they're going to give the CEO another year or not. And he's one voice. He could stand up. I know this firsthand. I got on the board of the New York Times, and the first thing I said was we should replace the CEO. She knows nothing about digital, and that's where our future is. And 2, we need to cancel the dividend and double down on digital. And 3, we need to turn off Google. None of those things happened. None of them. Because there were 11 other board members that saw me as this like obnoxious 30-something-year-old jerk who assumed I was smarter than I was.
How old were you?
When I went on the board of the New York Times,
yeah.
I guess it was older than that. I was 41, 42.
That's crazy.
Anyways,
Sorry, go ahead.
Enough about me. But so, look, this is everything he's asked for is reasonable. Mm-hmm. And my prediction is that the shareholders are going to agree with that viewpoint and tell Bob and the board to just settle it and put him on the board. But this company has underperformed. Board members aren't there to be prescriptive. They're there to provide guidance around big decisions. Yeah. And I think he'd be a fantastic board member. I don't get this at all. This makes no sense. Put him on your board, Bob. Put him on the board, Bobby. Bobby.
All right. Prof G likes Nelson. Let's move on to our second story. Last week, we saw earnings from the big US banks, including Morgan Stanley, Goldman Sachs, JP Morgan Chase, Bank of America, and others. Despite the macro headwinds that they all cited, every bank beat Wall Street's expectations except for one, Goldman Sachs. Goldman's earnings per share came in at $3.32. That's compared to analyst estimates of $5.48. That's a big miss. Actually, it was Goldman's largest earnings miss in a decade. Scott, what went wrong here?
So what it sounds like is they overinvested in Marcus and their consumer banking programs or efforts. And that is they kind of went all in on these things, looking to leverage the Goldman brand, looking to kind of position themselves for the brave new world of being a neobank, getting into transactions and payments. And I would argue those sort of experiments are what you should be doing. Should they have gone as all in as they did? It's easy to heckle from the cheap seats, but I would argue that trying to find new areas of growth and moving to this brave new world of online banking and payments and leveraging the Goldman brand, I mean, I'm not. If I'd been in the boardroom, I would have approved it. The Goldman brand is so incredibly strong that this is cyclical. I think they'll bounce back really quickly. I would bet the stock's a buy here. I think the stock is a buy here. And I'm biased. I know David, and I like him. And I think Goldman's just kind of the best brand in financial services. I would argue that Goldman Sachs is arguably the best brand in B2B globally. I don't know if that you would argue if it's McKinsey or Accenture. I don't know. Anything that has the prestige value of Goldman Sachs in terms of self-expressive benefits, saying I work at Goldman Sachs or Goldman Sachs is taking my company public. I like saying that Goldman Sachs is manages my money. That makes me feel important and successful. So I think they'll recover from this. What's interesting is there's some crossover between what ails, or so there's some then overlap between what ails Disney and what ails Goldman Sachs. And that is Disney wanted to do the cool thing. Disney wanted to go into kind of the brave new world of streaming. And unfortunately, the new players in there have access to really cheap capital because Disney and Goldman are mature companies that their shareholder base wants profits. And then when Goldman says we're going to go into this brave new world of online banking and payments, then all of a sudden, boom, they are competing against players with infinitely deep pockets, meaning they have to spend crazy amounts of money that they're not used to those low returns on invested capital. So essentially both Disney and Goldman suffer from the same desire to be young again and pump their face full of Botox in the form of going after the cool new stuff and spending a lot of money on it. It's probably easier to say Goldman shouldn't have done it. I don't see how Disney could stay out of the streaming wars. Maybe they could have just licensed their content and made a shit ton of money. But I think the rationale for having their own, they have such an incredible content library. Their streaming network does stand on its own 2 feet. But they both suffer from the same thing, and that is they have tried to be younger again and invest in growth areas where they're up against firms with infinitely cheap capital that doesn't foot to their shareholder base. Their shareholder base wants a lower growth company that's hugely profitable and can spin out a dividend. But it's kind of same dog, different fleas.
So if you look at these earnings compared to analyst estimates, it was obviously way off. But if you look at Goldman's annual revenue and even its annual net income, this was actually its second best year in a decade. I mean, it was way down from 2021. In 2021, they made $59 billion. This year, they made $47 billion in revenue, and net income was $22 billion in 2021 versus $11 billion this year. But 2021 was a blowout year. So something we were discussing earlier, it feels like the learning here isn't that Goldman's entire business is failing. It's just that it's failing on its guidance. Do you think that's a fair assessment, Scott?
You're learning, Ed. The student is becoming the teacher. What are you doing? You're putting this in context, right? It's a much more interesting story to say they threw up and they missed earnings. But the reality is, historically speaking, Goldman and the management team there are doing really well. They just aren't doing as well as they were last year when all the moons lined up and there were people doing SPACs and people buying things at crazy numbers. I mean, everything was firing on all 12,000 cylinders there, and now it's just normalizing. The great thing about a services organization is it's really easy to rationalize costs because almost like all of your costs are people, and it's easy to ramp down and to ramp up because a services company, like I said, all of your costs go down in the elevator, and you can just make sure it's one way.
Oh my God, that was coarse and unfeeling.
Okay, let's move on to our third story. The mobile dating app, Hinge, is releasing a new subscription tier that's expected to cost $60 per month. Hinge's parent company, Match Group, says the premium version will target, quote, highly motivated daters, and it will offer enhanced features that give users more exposure as well as better recommendations. Match Group is also testing a premium version for one of its other dating apps, Tinder. And this one is reportedly going to cost, get this, $500 a month. Scott, pay-to-play dating, is this a good idea?
Well, it's probably a good business idea. We're all subject to the desire to signal as a means of saying we're more attractive as a mate. The reason why Grey Goose alcohol is so successful is some genius said, instead of charging $30 for a fifth of vodka, charge $50. And it signals to people in clubs that you're a more viable mate because you can afford Grey Goose as opposed to Smirnoff or Absolute or what have you. It was just this genius pricing and signaling move. The Centurion Black Card. I have a Black Card. I'm guilty of the same thing. And that is I pay $5,000 a year for a credit card, which makes no fucking sense. But I want to say to my friends and other people that I'm a player because I'm desperately insecure and I want to be seen as important. So this signaling to say, okay, I can afford to pay this. Where I think this ultimately heads, though, is that there are more men on dating apps than women. Wealth is more of a criteria, and we don't like to say this on the left, but wealth is a more important criteria for men, or at least the ability to garner. You look like someone who might be wealthy in the future. It's more important to women than it is to men. So I would bet we end up in a situation where we have dating apps where they price discriminate and say it's 5x per month for men and 1x or even free for women. But they should price discriminate. I think this makes a lot of sense. Ed, what do you think? Well, we have all these young people. Are we doing a dating app thing? Are we talking to people about dating apps?
Yeah, we should. I mean, the first thing I want to point out is I agree with you that, you want to release these premium versions to signal your wealth. But don't you think that the phrase highly motivated data is sort of Latin for like highly desperate data? Like that's not the kind of identity that I would want to be associating with.
I think that's a fair point. I think that, and I hadn't thought about it that way, but I think that slowly but surely don't a lot of the dating apps offer you opportunities to increase the visibility of your profile? Don't they sort of go that way anyways? Yeah. So it just makes sense that you get to sit up front if you pay on a plane, if you pay more. You get better placement on a website or in search rankings if you bid more. Why wouldn't your own personal profile have the opportunity with additional payments to be pushed to the front of the plane or at the top of your search results? Yeah. It's such a weird and sort of controversial business to be in because you're basically telling consumers that you're going to help them find a partner. But if they do find a partner, then you've just churned that subscriber. So the best strategy economically is just to keep them from finding their partner so they keep on going on dates and they keep on using the app. And I think that Hinge's slogan is really clever, which is designed to be deleted, which I think is a great idea. It's a great concept, but it's also quite manipulative because the reality is, no, it's not designed to be deleted. It's designed to be downloaded. It's designed to stay in your phone and keep dating, eventually charge you $60 a month. Do you think I'm being too cynical about their market strategy? I don't know. I think over time, and I just don't know this, but I think over time, what's also a great signal is they want to be able to say that people. I would think it's a great advertisement when you go to a wedding and they met on Tinder or whatever. Although, true story, I was on a dating app this morning, and I swear to you, I found my soulmate. And then about a moment later, I thought, wait, if I swipe left, maybe I can find a soulmate who's even hotter. Oh, that's good dating humor. Good on. I've never been on a dating app, by the way. I'm too old for that shit. Speaking of successful Hinge matches, Claire met her girlfriend on Hinge, and it's going super strong. So I don't know, Claire, if you have any insights onto whether this is a good idea. How did it happen?
True. Well, let me start from the beginning. I guess I was on Hinge for 10 months. I did pay for it for the first 8 and I hated it. It felt like a chore to just wade through all these people that I didn't want to talk to. But then Scott, you said something actually that made me kind of change my perspective on it. I started thinking about it more like an algorithm rather than just kind of a random app, and tried to
Right.
figure out how I could kind of game the algorithm. And once I started playing with it, having more fun, then I was motivated to pay for it because I guess I paid for 2 months at $30 a month. And it allowed me to see everyone who had sent me a like or a message all at once rather than having to sort through everyone without knowing what was coming next.
Yeah.
And yeah, I started having fun with it. It made it kind of a game. I guess it was sort of gamified at that point. And yeah, I went on 3 dates. The first one was okay. The second one was pretty good. We had a few follow-ups, but wasn't super into it. And then the third one was Carmen, and we've been seeing each other for 9 months now. So worked
that
out.
to me sounds that I can't imagine a better ad for dating. First one, it doesn't sound like you had any terrible experiences, and it sounds like your experiences kind of range from good to great.
Yeah, pretty much. Yeah, it was a lot of fun. It was like right as it was getting to be super enjoyable, it was game over because I met the person that I just wanted to continue seeing.
So how soon after did you churn and cancel the subscription?
Pretty soon after. It was like
An hour.
an hour. Yeah, no. No, I don't know. It was probably a couple weeks, I think. I canceled it, and then like a month later it came up and she hadn't canceled it yet. She still had it on
You
her
hear about
she
this a
still had it
lot.
on her phone.
Yeah.
Yeah, and then yeah, we sat there and then she deleted it.
There you go.
But yeah, I don't know. It was great. I had a lot of fun with it. But it's not all, I don't know. It's easy to say when it's a success. I don't know, Ed, you've been
So
on
wait,
Hinge
hold on.
too.
But let's look at the announcement. What was your total expenditure on Hinge?
It was $60. So
So your
$60
total
for 3
expenditure
people.
was $60.
Yeah. And then I
Okay.
canceled it. So obviously that's not like sustainable reoccurring revenue really.
So Claire, I mean, literally, I would spend $60,000 and have terrible relationships. I mean, this is literally the
3,000 on
highest.
drinks.
I want to, yeah. Okay, Ed, let's go to the other. I won't even talk about the amount of money I've spent to have bad relationships. Ed, talk about online dating for you.
It's good. I don't do it that much, but I recently got on Raya. Have you heard of Raya?
Isn't that supposed to be the more selective one?
Yeah, it's like the
Ed,
it's
what?
yeah. It's like for people who want to be a big deal but aren't. So it's like perfect for me.
Did somebody refer you?
Yeah, a friend referred me. But interestingly, that's only $10 a month. So it's actually cheaper. But yeah, I don't know. I see it the same as Claire. I see it as a chore. I don't really enjoy it. I don't have fun doing it. I just think of it, oh yeah, it's something to do to go out and meet people. But I don't have fun swiping through. And then the dates, some of them work out, but I would say that, one of every 5 matches actually materializes into a date, maybe even more. So,
and why?
yeah.
Well, hold on. Why is that? If you match with 5 people and only one results in a mate, is that because they ghost you? The two of you don't have a connection? What?
Yeah,
What happens?
I think both. Sometimes I would receive a message and I'm like, I'm not pay attention to it, and then sometimes I send a message and I don't know what they're thinking, but it's probably the same thing.
Sounds like you need Claire to be your ghostwriter.
Yeah, exactly.
I've
that's what
tried
I'd
to
love.
advise. I've tried. Ed,
I would
have
love
you-
you've given me great advice, but what I want is like an AI generated chat GPT to just
No.
automate all of my dating functions.
Ed, have you started actually sending messages, or are you just sending likes now?
I send messages.
Good.
Yeah. Yeah, I put myself out there. Okay, I think we've chimed in enough. We want to turn it over to some other New Yorkers and see how they feel about dating apps. Here's Mia on the street.
Have you used dating apps, and what has been your general experience?
It's been successful. I met my partner there. Wow. So like a lot of people like are like, I thought Hinge was a wasteland before I met him. I was like bottom of the barrel with Hinge when I met him.
I downloaded Hinge like the night I moved to New York. And I got like really like addicted to it. I was like, yeah, I think the first week I like on my screen time, it was like 11 hours or something.
I feel like I found pieces of New York through meeting people on the apps.
Wow.
So that's been fun.
That's so lovely.
At this point, if I were to go into dating apps, I would be most interested in something like Field.
What is that?
Field is like mainly for like non-traditional, like poly, kinky people, which is just a lot more interesting to me.
So like a little bit more niche, so you're kind of already filtering some people.
Yeah.
Cool. Yeah, what immediately came to mind is there's a dating app for people who are gluten-free, and I'm gluten-free.
So I've been on OkCupid for quite some time. I haven't been super active on it, but I've had an account with them on and off. I want to say for like 10 years.
I'm on Raya personally. I'm not trying to brag or anything.
Ooh.
You know, honk for Raya.
With men, it's really easy because they would message me. Like, I wouldn't really message men. But, like, I'm bisexual, so with women, it's like, I feel like if you turn men off, the options become so limited because women just don't answer.
One thing that gets a lot of play on the dating apps is I went to magic camp as a kid, and that's on there, and I have this photo of me in kind of like an oversized bow tie.
I'm also on the asexual spectrum, so for me, like, swiping through people on apps isn't super appealing because I like to get to know someone a little bit beforehand.
Hinge, because it's like, a little more like, hey, we're all just trying to do our best and find love. You find better people, I found.
And can you break down the biggest dating apps and sort of brand them for us? If they were cars, just give us the positioning of all of them.
Yeah, well, the thing that's interesting is that this parent company we've been talking about, Match Group, owns 45% of the entire US market. So they have Tinder, Hinge, and OkCupid. And Tinder makes up 32%, Hinge is 10%, and OkCupid is 4%. So the thing that, I don't know about how you'd rank them. I've never really heard of anyone my age using OkCupid. I don't really know anyone who uses Tinder. To me, it's all Hinge. But the thing that's interesting is that they seem to be developing pretty much a monopoly over this space. Do you think that 45% market share is enough to say this is a monopoly?
That's a lot. I guess Tinder's the cash cow. It accounted for 55% of Match Group's $3 billion in revenue in 2021. This is a huge business. But going back to the psychology of it, well, let's talk about the business. In Q3 2022, revenue grew 1% in Match Group. Tinder's up 6%, Hinge is up 40%, and the established brands Match, Meetic, I guess it's called, OkCupid, and Plenty of Fish declined 15%. So it seems like the market's consolidating. Net income is down 38% in the past 9 quarters to $129 billion versus the same period last year. So this is a huge business. It's dominated by one player. The question I have is more, I guess, socioeconomic or more societal, and that is, if you meet somebody and you like them, you kind of sort of get invested in that relationship. But when the apps are always there, isn't there just a temptation to like, oh, I didn't have a great date, or I'm not sure if this is the one, to go back on the apps? Doesn't this just create a massive amount of churn?
I think so. I think that's a great description of it. But I also think it's also a function of being in New York City. It feels like whenever there's just a bunch of people, there's a bunch of options everywhere, you know that that's never going to run out. It just creates a tendency to take things less seriously. But I don't know, Claire, what do you think?
I haven't had that desire. I mean, I'm happy
Claire's
with
in love. Claire's in love.
Yeah,
oh
you're
my
right.
God,
You're
look
right,
at her.
Scott,
It's
I am.
external factors, isn't
Oh
it?
my God. Oh wait, I just pulled up an app. Carmen's back on the apps, Claire. Carmen's back.
Get off
Well,
of
this
there,
is-
Carmen.
This has been illuminating. The dynamic that we talk a lot about on this show is that when technology enters any category, it consolidates it. So Amazon comes into e-commerce or online retail, and then not overnight, but over time, 50% of all e-commerce is going to one player. Meta and social media, 2/3 of all social is one company. Search is obviously 93%. And it looks like the same thing is happening in online dating. One, from a company standpoint, one company seems to be controlling, Match Group's control of this industry is as dominant as Amazon's control of e-commerce. And two, there's also a crowding effect or a consolidation among actual mating. And what do we mean by that? The studies I've seen have shown, especially among men, that the majority of interest from women, assuming it's a heteronormative matching system, the majority of interest is expressed or allocated across a small number of men, meaning that the small group of men who are in that category get a ridiculous amount of interest and all the other men are shut out, whereas men are less choosy. Men will basically say, oh, she looks nice or she looks cute and swipe right, whereas women are much more choosy. And a lot of people would argue that it's created this social dynamic where the less attractive, the lower median of attractiveness or the lower half of attractiveness among men are shut out of the mating market and are resentful. And it's confirmation for them that no one's interested in them, and it ends up being a very depressing experience, especially for men. Although it's women I hear complaining about the dating apps. I don't know if men just suffer in their own
Suffer
misery.
in silence.
What do your friends, Claire and Ed, what do your friends say about dating apps?
I think most people hate them.
Yeah.
Yeah.
Why?
It's just frustrating. You see so many people and you have to get through so many people just to find a few people that you actually want to take out.
Yeah, I don't think any of my friends really take dating apps seriously enough. And I have a friend who says, "Why are you on a date? Just go to a bar and meet someone," which I agree with. Anyway,
so you still think the old-fashioned way is easier, going to a bar?
I think it's just better and more natural.
Mm-hmm.
I think it's a lot about what you say about, you need to learn the skills to feel awkward and feel nervous and go up to someone and talk to someone. And what these dating apps are doing are just removing all of the friction and all of the anxiety associated with meeting people by just swiping and clicking and sending the message. I mean, as Claire said, I rarely even send a message. I'll just tap the like and done. It's over. We'll see what happens. So yeah, I think what you say, Scott, is right. And the learning should be, I think, go meet someone that, at a bar, or go talk to them or ask your friends to set you up with someone. I think that's the best way to do it. It's at least the most natural way.
I mean, it's certainly the most romantic way. And I think everybody wishes they could have that. But I think it's also different when you're a queer person on an app versus a straight person, because a straight person can walk into any bar and kind of reasonably assume that whoever they're approaching is also straight. Queer people don't really enjoy that same privilege in most spaces. We have to be in an explicitly queer space. But the thing is, in New York, even in New York, possibly the most liberal of all places in the States, there's a handful of lesbian bars, more gay bars, but, there's only a few choices where you can go and, confidently approach somebody and know that they're not going to be just have a boyfriend or be straight, so it's a different experience. And then being on Hinge, if you see a woman on there, that she's indicated that she's interested in women, so you can
that's a good point.
confidently approach her.
I think that's the best argument I've heard for
Yeah.
the value of online dating.
Yeah, totally.
And Ed, just a little bit of advice: you need to find a dating app where you record a voice recording, because
Hinge lets you do it.
Hinge has that.
your
You
voice,
don't want to do that.
your voice in that accent, money.
Ed, are you kidding? That's
Money.
the number. Yeah, you would have it in
That's
the
my one
bag.
asset.
Yeah, it's the one thing you have.
That's it. No picture. No
All right, well,
picture.
Scott, write me a tagline, then I'll consider reading it off,
There you
and
go.
we'll see what happens.
Well, this has been illuminating. Thanks for the conversation, and I love Claire. I love your story. That's inspiring, and you literally should be a spokesperson for Hinge.
Thanks, Scott. I'll see if they can sponsor me.
There you go.
Okay, let's take a look at the week ahead. We'll see fourth quarter GDP data for the US, as well as December's PCE price index. That stands for Personal Consumption Expenditure. It's also the Fed's preferred measure of inflation. We've also got another big week of earnings. Microsoft, Johnson & Johnson, and Tesla are all reporting. Scott, any predictions for us?
Well, two predictions. One comes back to an earlier story. Disney is going to let Nelson Peltz on their board. It just makes too much sense. They're going to start getting calls from their shareholders saying, hey, come on, put him on your board. Enough already. And also, to our first story, China does things in very big and bold ways. And I think they're going to, the CCP is smart. They're going to see this existential threat around population decline, and they're going to start creating economic incentives for people to have kids. I remember being in Singapore 20, 25 years ago, and there being ads in the subway of all these kind of Hallmark Channel moments with people pillow fighting with their children and saying, having a family is what life is all about. It was basically, oh my God, this is the weirdest branding I've ever seen, trying to promote family life.
Yeah.
And Singapore saw the same danger and said, we need native Singaporeans to start having more kids. And they had a big ad campaign that was very sophisticated and very slick. Anyways, one, Peltz is going on the Disney board, and two, we're going to see China come up with social and economic incentives to actually have more kids, reversing their one-child-only policy. And this isn't anything new. In Australia, the government provides up to 18 weeks of pay at the minimum wage, the equivalent of $9,500 US for people who have children. In Germany, parents receive a child allowance of $270 per month for every child until they are 18. By the way, that brings me up. My dad's child support payment when I was a kid was $226 a month. Yeah, that went a long way. And in Taiwan, parents of children ages 2 to 5 receive an allowance of $115 to $165 per month. So this isn't a new idea. That's all for this episode. Our producers are Claire Miller and Jason Stavers. Special thanks to Catherine Dillon, Ed Elson, Mia Silverio, and the Prof G Media team. If you like what you heard, please follow, download, and subscribe. Thank you for listening to Prof G Markets from the Vox Media Podcast Network. We will catch you next week.
All right. Good job, Scott. Thank you.
I love that conversation. I loved that story, Claire. I thought that was the highlight of the show.
Thanks, Scott. That was fun. Happy to do it.
Yeah, it was awesome.
We've definitely cursed that relationship.
Oh, God. I can't say that.
Definitely cursed that relationship.
No, we're good. We're good.
Ed, I'm telling you. So, Ed, just let me give you a little insight. You're a 23-year-old male in New York, right? Is that right?
Mm-hmm. Yep.
You have absolutely no game. Women have no interest in a 23-year-old male. First off, you're a dope. You might as well be 17. Two.
Are we rolling?
Yes, we are.
Two.
You think I'm going to hit cut?
Two, and this is something people are going to tell you on the left. Women, if they're in New York, they want access. They want to go to the Hamptons. They want to go to St. Bart's. They want to date a guy with money and access, and you have neither right now. You will not be able to get arrested for the next couple of years. And then here's the thing. All the women who are rejecting you now are going to complain that they can't get dates, and you're going to start rejecting them. There's going to be this enormous power flip.
Let's go.
In about your early 30s, when you start making money and you're a little bit more comfortable with yourself, and the same women who want nothing to do with you now won't be able to get a date with you. So just get through the next few years.
Yeah, just hang in there, Ed.
That is awesome. Love that.